Uh, Good evening, everyone. Today we have a special day because, as I informed you earlier, we have a guest lecture on value-added tax (VAT) conducted by Mr. Nadika Suranjana. Actually, Mr. Nadika Suranjana is very helpful for our course. He has been doing this lecture, as I remember, since 2018. As I remember, this is the third consecutive time that he is doing this lecture. Uh, Let me introduce Mr. Nadika Suranjana. He is a member of the Institute of Chartered Accountants of Sri Lanka, Chartered Accountant, uh, and also a proud graduate of our own university. And he serves as the tax partner of Vijayaratna and Company, Chartered Accountants, and also a director of HLB Lanka Business Advisors Services Private Limited. And he counts more than 10 years experience in the field of taxation. And also he's a very good lecturer in the taxation, in the field of taxation in private educational institutes. So as I mentioned earlier, he was very supportive for us to conduct this program effectively and efficiently. So today, I think that you can get a lot of insights about the value-added tax topic. So I think that you will get the maximum benefit of this lecture. So if you have questions, you can ask questions by using the chat box, and even the microphone can be used. Right. So without wasting the time, let me invite Mr. Nadika Suranjana to conduct this lecture. Mr. Nadika Suranjana, over to you.
Thank you, sir. Good evening to you all. Thank you very much for the nice introduction and the invitation. Yes, this is the third time I'm doing this presentation on VAT. Thank you for the invitation, and we'll quickly go to the presentation. We have over 40 slides to discuss today. Hope you can see my screen.
Yes, we can.
This is clear enough, no?
Yes, it's clear.
Right. Hope you can all see me as well.
Yes.
Right. Now, you know, as you all are aware, only government can impose taxes on the public. So no one else can impose taxes, collect taxes. So only a government can do that. But even the government cannot charge taxes without a legislation in place. So there has to be a legislation, there has to be an act that is passed in the parliament. Even the government is going to collect taxes from the public. So that is why we have different acts or different legislation to collect different taxes. If you take income tax, then we have this Inland Revenue Act. Earlier we had the tax called Nation Building Tax. So at that time we had the Nation Building Tax Act. So likewise for value added tax, so we have this Value Added Tax Act number 14 of 2002. So the VAT was introduced in 2002 by the Value Added Tax Act number 14 of 2002. So basically what we are going to discuss today is the provisions, some of the provisions, not all the provisions, some of the provisions that are applicable to your program. So these are the areas I'm going to discuss today. First, we will look at the imposition of VAT and some interpretations, definitions, and the concept of time of supply, registration requirements, goods or services supplied in Sri Lanka, and non-taxable supplies. Then we will discuss about the VAT on importation of goods. Then how to calculate the VAT payable and the obligation we have under this act as once you register. And finally, simplified value-added tax. So first of all, I'm going to discuss about the Section 2 of the Value-Added Tax Act, which is known as the charging section. So it says, VAT shall be charged in two situations. Two situations are given. So we will look at what these are. So VAT shall be charged under A at the time of supply on every taxable supply of goods or services made in a taxable period by a registered person in the course of carrying on or carrying out a taxable activity in Sri Lanka. That is the first scenario. The second scenario is the VAT shall be charged on the importation of goods into Sri Lanka by any person. So I have highlighted some keywords, important words here, which we are going to discuss when the presentation is going on. So we will come to these keywords later, but for the time being, let's try to understand, to get a basic understanding about Section 2. So if we read this again, that shall be charged at the time of supply. Time of supply. What is the time of charging VAT? The time at which VAT is charged. So on every taxable supply of goods or services. So I want you to make a small note here relating to supply of goods or services. The supply of goods or services can be divided into two. Supply of goods or services can be divided into two. One is taxable supply of goods or services. Taxable supply of goods or services. And the other one is non-taxable supply of goods or services. Supply of goods and services are two types: taxable supplies and non-taxable supplies. Non-taxable supplies are known as exempt supplies. Exempt supplies, right? Taxable supply of goods and services can again be divided into two. Supplies that are chargeable with chargeable at 0%. Supplies that are chargeable at 0%. Next one is supplies that are chargeable at the standard rate. 0 rate and the standard rate. So keep that classification of supply of goods and services in your mind, because the taxable, non-taxable, 0 rated, standard rate, we will discuss about this, these concepts throughout this presentation. I'll repeat that again. Supply of goods and services can be divided into two: taxable supply of goods and services, non-taxable supply of goods and services. Non-taxable supplies also known as exempt supplies. Taxable supply of goods and services It's of two types, supplies that are taxable at zero rate, supplies that are taxable at the standard rate, right? Keep that in mind. It will be easy for you to understand these concepts when we go ahead with the presentation, right? So VAT shall be charged on every taxable supply of goods or services. So it is not charged on non-taxable supply of goods or services or exempt supplies. So it is charged only on taxable supply of goods or services made in a taxable period. I will explain the meaning of taxable period later. By a registered person. By a registered person. If you want to charge VAT, you have to be a registered person first of all. Otherwise, without getting a registration, no one can charge VAT. Because now this is a special authority given to you by the government to collect taxes from the public on behalf of the government. So it is a big responsibility, right? So to charge VAT, you have to first be a registered person, then only you can charge VAT. In the course of carrying on or carrying out a taxable activity in Sri Lanka, right? There has to be a taxable activity carried on or carried out in Sri Lanka, right? We will discuss about the taxable activity in the next slide, meaning of it. So that is the first part of section 2. The second part is what shall be charged on the importation of goods into Sri Lanka by any person. On the importation of goods, when you import goods into Sri Lanka, you have to charge VAT. But here, by any person, you don't have to be a registered person to charge VAT on the importation, right? But here, there's a small registration known as temporary registration that I will explain. But anyone who is importing goods into Sri Lanka, at the time of importation, he has to charge VAT. So that's about the section 2. We will have to look at these important words, the meaning of important words, and try to get a better understanding about section 2. So we are going to look at the meaning of taxable activity. As I told you, there has to be a taxable activity carried on or carried out in Sri Lanka if you want to charge VAT, right? So what is the meaning of taxable activity? So under that, the Act has given 5 activities that are treated as taxable activities. If someone is doing any of these activities, he is doing a taxable activity, so he has to charge VAT. So we'll look at the activities that are treated as taxable activities. So taxable activity means any activity carried on as a business. So if you are doing a business, you are doing a taxable activity, right? The provision of facilities to its members or others for a consideration and the payment of subscription in the case of a club, association, or organization. You know, in a club, the club provides facilities to its members and the club collects a subscription for that. The club is doing a taxable activity. So the club has to charge VAT because it is doing a taxable activity. The third one, so item C, anything done in connection with the commencement or cessation of any activity or provision of facilities referred to in A or B. If you are doing anything that is connected with the commencement or cessation. Now let's say if you are doing something that is connected to opening up of a business or closing down of a business, there you are doing a taxable activity. So you have to pay, you have to charge VAT because there is a taxable activity. Activity D, the hiring or leasing of any movable property, or the renting or leasing of immovable property, or the administration of any property. If you are leasing out a building and earn rental income, it's a taxable activity. So you have to charge VAT. The next one, the exploitation of any intangible property, such as patents, copyrights, or other similar assets, where such asset is registered in Sri Lanka or the owner of such asset is domiciled in Sri Lanka. If you are using an intangible property that is registered here in Sri Lanka, or the owner of such intangible property is residing or domiciled in Sri Lanka, you are doing a taxable activity. So these are the activities that are listed as taxable activities. If someone wants to charge VAT, he has to do one of these activities. So with that understanding, we will look at question number 1. A company which is engaged in the business of manufacture of articles has the following income disclosed for the quarter ended 31st December 2021. Under turnover, the company has declared sale of manufactured goods locally 1,200 million, export of manufactured goods 500 million, under other income, repair services 129 million, scrap sales 35 million, rent income 5 million, dividend income 4 million, interest income on fixed deposits 2.5 million. Identify whether the said items are chargeable with VAT and state the taxable activities into which the said items fall. Right. Under turnover, the company has declared sale of manufactured goods locally. Is it chargeable with VAT? Yes, it is, because it is the company's business, manufacturing and sale of goods. Company is doing a business, the company is carrying on a taxable activity, so it is chargeable with VAT. So it falls into item A or the category A of the definition for taxable activity. There we find any activity carried on as a business. So the company is doing a business, it falls under item A of the definition for taxable activity. Export of manufactured goods, 500 million. It's also a part of the business. It is also chargeable with VAT and it falls under item A of the definition for taxable activity. Other income, repair services, scrap sales. Repair services and scrap sales, both are part and parcel of the business. So those are also falling under item A of the definition for taxable activity. Repair services and scrap sales, chargeable with VAT and fall under item A. Rent income, 5 million. It doesn't fall under business because we have item D here. The hiring or leasing of any movable property, or the renting or leasing of immovable property, or the administration of any property. There can be situations where the renting or the leasing of properties is carried on as a business. But in this case, this company is engaged in the business of manufacture of articles. So the renting of properties is not their business. So it is chargeable with VAT because there is a taxable activity, but it doesn't fall under item A. It falls under item D of the definition for taxable activity. Item D. Then we have dividend income and interest income on fixed deposits. These are not part of the business. These are actually investments. You get dividend income when you invest in shares. You get interest income when you invest in deposits, like fixed deposits. So these are investments. So does it fall under any of these activities? No, it doesn't fall under any of these activities, dividend income and interest income. So there is no taxable activity there. Since there is no taxable activity, those items are not chargeable with VAT. Dividend income and interest income are not chargeable with VAT. Right. Now we will look at the meaning of taxable supply. As I told you, VAT is charged only on the taxable supply of goods or services. So we have to understand the meaning of taxable supplies, because it is charged only on the taxable supply of goods and services. It is not charged on non-taxable supplies. So the taxable supply means any supply of goods or services which is chargeable with VAT, chargeable with tax, and includes a supply charge at the rate of 0%. As you already know, supplies that are chargeable at 0% are classified under taxable supply of goods and services. So the taxable supply includes supply charged at the rate of 0%. Other than an exempt supply. You know, exempt supplies are treated as non-taxable supplies. VAT is not charged on non-taxable supply. So exempt supplies are excluded. So what is covered as taxable supplies? Supply of goods and services that is chargeable at the rate of at the standard rate, and the supplies that is charged at the rate of 0 rate. So under that, supply of goods and supply of services are also defined. Let's look at the meaning of supply of goods. Supply of goods means the passing of exclusive ownership of goods to another as the owner of such goods or under the authority of any written law. If you are the legal owner of a particular good, and if you pass the ownership of that good to another person, there is a supply of goods. As the legal owner, you pass the ownership to another person. There's a supply of goods. And it says supply of goods includes the sale of goods by public auction, transfer of goods under hire purchase agreement, sale of goods in satisfaction of a debt, and the transfer of goods from a taxable activity to a non-taxable activity. Transfer of goods from a taxable activity to a non-taxable activity. Now, as an example, if you are donating the goods that are available in your business to a temple, you are transferring goods from a taxable activity, which is your business, to a non-taxable activity. That says, when you transfer goods from a taxable activity to a non-taxable activity, it should be treated as a supply of goods. Now we will look at the meaning of supply of services. Supply of services means any supply which is not a supply of goods. You see the way it is defined. Supplies are two types: supply of goods, supply of services. Supply of goods is defined, right? Supply of goods is defined, and supply of services is defined to include everything. All the supplies other than supply of goods. So what is not covered here? Everything is covered. If it is falling under supply of goods, then it should be supply of goods. If it is not falling under that, it must be a supply of service. But includes any loss incurred in a taxable activity for which an indemnity is due. If you incur any loss when you are doing a taxable activity, and if the loss is compensated or indemnified, it is treated as a supply of service. Now, as an example, if your stocks are damaged in a flood and you get the insurance claim from the insurance company, your loss is indemnified. That says it is a supply of service. You have to pay tax on it. You have to charge VAT on it. Right. That is about the supply of service and supply of goods. We will look at question number 2 and 3 to understand these concepts properly. Question number 2, advise whether the following supplies fall within the meaning of taxable supplies for the purpose of chargeability of VAT. We have to identify whether the supplies are falling within the meaning of taxable supplies or not. First one, supply of manufactured goods which is chargeable at the standard rate of 8%. It is a taxable supply. Supplies that are taxable at the standard rate are treated as taxable supplies, as I already explained. Export of manufactured goods which is chargeable at 0%. It is also falling under the meaning of taxable supplies. Third one, supply of computer, which is an exempt supply under the first schedule to the Act. As you know, exempt supplies are treated as non-taxable supplies. So it doesn't fall within the meaning of taxable supplies. Only the first two are treated as taxable supplies. Supply of computer is not a taxable supply. It is an exempt supply. Question number 3, advise whether the following transactions fall within the scope of VAT as a supply of goods or a supply of service for a VAT registered company. Whether it is a supply of goods or supply of service. Sale of manufactured goods. Definitely it's a supply of goods. Export of manufactured goods, whether it is local sale or whether it is export, It's a supply of goods. Disposal of machinery. Here also, if you are the legal owner of that particular machinery and you pass the ownership to another person. It's a supply of goods. Donation of manufactured goods to the government. As I explained, if you are transferring goods from a taxable activity to a non-taxable activity, it is treated as a supply of goods. So the donation of manufactured goods to the government, it's a supply of goods. Renting of part of business premises. Renting of part of business premises. Is it a supply of goods? Are you passing the ownership of the business premises to the tenant? No. So it is not a supply of goods. It's a supply of service. Renting of part of business premises is a supply of service. Insurance claim received in respect of damaged stocks manufactured by the company. As I told you, if you incur any loss for which an indemnity is due, or if the loss is indemnified, then it is treated as a supply of service. So the last one should be treated as a supply of service. Right. Now we are going to discuss about the meaning of time of supply, which is very important in the VAT law. It's a very important topic. As I told you, VAT shall be charged at what time? At the time of supply. So what is the time at which VAT shall be charged? What's the time of charging VAT? So the Act has given four scenarios. Under that, the supply time of supply is explained. The four scenarios are 3.1, the time of supply in relation to supply of goods. When you supply goods, what is the time of charging VAT? Under 3.2, we have time of supply in relation to supply of services. When you supply services, what is the time at which VAT shall be charged? 3.3, time of supply in relation to a supply made under an agreement providing for periodical payments. Here what happens is you do the supply, there is an agreement, under that you do the supply, and the agreement provides for periodical payments. You will get the consideration in installments in the future. So if you are supplying under an agreement for periodical payments, what is the time that should be treated as the time of supply? Under 3.4, last scenario, supply on payment basis as directed by the CJIR. So we will look at these four scenarios and try to understand the concept of time of supply. What is the time at which VAT shall be charged? Under 3.1, time of supply in relation to supply of goods. Now here, the Act has given four situations that can happen when you supply goods. Right? Four situations are given that can happen when you supply goods. Out of these four situations, the Act says you have to identify the situation or the activity that happens first. 4 situations are there. You have to identify the activity that happens first, and that should be treated as the time of supply. That is in relation to supply of goods. Now, the supply of goods shall be deemed to have taken place at the time of occurrence of any of the following, whichever occurs earlier. The activity that happens first. The issue of an invoice by the supplier in respect of the goods. That's the situation 1. Issue of an invoice by the supplier. That's the time when you issue the invoice. A payment for the goods, including any advance payment received by the supplier. That is another situation. The time of receiving money, including advance payments. A payment for the goods is due to the supplier in respect of such supplier. That is when you recognize the time of recognizing your receivable. Last one, the delivery of goods have been affected. That is the time of delivery. So out of these 4, the time of issuing the invoice, the time of receipt, the time of recognizing the receivable, or the time of delivery of goods. Out of these 4, what happens first in a transaction and in supply of goods shall be treated as the time of supply, right? As an example, if you receive the payment today, even without delivering goods or even without issuing the invoice, the time of receiving the money, that is today, shall be treated as the time of supply. You have to charge VAT today because you have received the payment, right? So we have to identify the activity that has happened first in relation to supply of goods, and it shall be treated as the time of supply, right? Having said that, it further says, if you deliver the goods today and issue the invoice within 10 days, the delivery of the goods that has happened first, but you have to treat the date of the invoice as the time of supply, even though the delivery of good has happened first. That is applicable only when you issue the invoice within 10 days after delivery of the goods. Right. That's about the time of supply in relation to supply of goods. Then we'll look at the time of supply in relation to supply of services. Again, like supply of goods, 4 circumstances are given. You have to identify the activity or the circumstance that happens first, and that shall be treated as the time of supply. The supply of services shall be deemed to have taken place at the time of the occurrence of any of the following, whichever occurs earlier. The time of the service of perform, that's the time of performing the service. A payment is received for the services rendered or for future services. That's the time of receiving money. A payment is due for the services rendered or for future services. That is when you recognize your receivable. An invoice is issued in respect of the services rendered. That is the time of issuing the invoice. Out of these 4, what activity happens first? It shall be treated as the time of supply in relation to supply of services. Now here also we have this 10 days provision. If you perform the service today and issue the invoice within 10 days, even though the performance of the service has happened first, still you have to take the date of the invoice as the time of supply in relation to supply of services. Right. The next one. Time of supply in relation to supply made under an agreement providing for periodical payments. So what happens here is you do the supply of goods or services under an agreement. The agreement provides for periodical payments. Then you will get the consideration in installments in the future. So that can happen under hire purchase agreement or any other agreement other than hire purchase agreement. So if it is a hire purchase agreement, where goods are supplied under hire purchase agreement, the supply shall be deemed to have taken place at the time the agreement is entered into. At the time of signing the agreement, the time of signing the agreement shall be treated as the time of supply. Second one, the agreement other than hire purchase agreement. If you do the supply under an agreement which is not a hire purchase agreement, and the agreement provides for periodical payments, the time of supply, the supply shall be deemed to have taken place when the payment is due or when the payment is received, whichever is earlier. It is not like hire purchase agreement. In hire purchase agreement, the time of signing the agreement shall be the time of supply. If it is an agreement other than hire purchase agreement, then the time of supply is the time when the payment is due or when the payment is received, whichever happens first. Last one, supply on payment basis as directed by the Commissioner General of Inland Revenue. Now, this is a special scenario where now if you look at the time of supply concept in relation to supply of goods, if you do the delivery of goods today, and if you are expecting the payment in 6 months period, what is the time of supply? Is it today or after 6 months period? It's today, because you have delivered the good today. You have to charge VAT today, you have to pay VAT today. But that will be collected from your customer in 6 months' time, right? So maybe it is your profit that is paid as taxes. So because of these provisions, so VAT is not payable on cash basis. It is not payable when you receive the money, because of the concept of time of supply. So we have to apply the time of supply. In my example, since you have delivered the goods today, even though you have not received the payment, still you are liable to pay back today, right? So this might create cash flow issues to the business that you are doing, right? To pay taxes, first of all, you must run your business. You have to have cash to pay taxes, right? So because of these provisions, some businesses are very badly affected because of the application of time of supply concept, right? Especially if you take a construction contractor as an example. The amounts are huge, margins are low, and it takes a considerable period to collect their dues from their customers. So if we ask them to pay taxes by applying the concept of time of supply, they might not be able to do their business in the future. So if you are badly affected because of the provisions of this act, you can inform that to the Department of Inland Revenue and get the Commissioner General's prior approval to apply cash basis without paying VAT on, without applying the concept of time of supply, without paying VAT on accrual basis. You get the approval from the Commissioner General to pay VAT on cash basis, right? That is given under section 23 of the Act. So if you are authorized to apply the cash basis, then the time of supply shall be the time of receiving the payment. You don't have to apply the time of supply concept that we discussed in relation to supply of goods or supply of services. There you are paying, you are liable to charge VAT, or you are liable to pay VAT on an accrual basis. And if you are authorized to apply the cash basis, the time of supply is the time of receiving the money. You pay the taxes after you collect the money. Right. So those are the 4 scenarios and the concept of time of supply under each scenario. Right. Now we'll look at question number 4. Identify the time of supply in relation to the following circumstances. Goods were delivered on 20th December 2021 and the invoice was issued on 7th January 2022. Goods have been delivered on 20th December. Invoice has been issued on 7th January. Can we apply that 10 days rule here? We can't. Because the invoice has been issued after 10 days after delivery of the goods. So we will have to take the date of delivery of goods as the time of supply in the present situation, which is the 20th December 2021 shall be the time of supply. Second one, goods were delivered on 20th December 2021 and the invoice was issued on 27th December 2021. They have complied with that 10% rule. Goods have been delivered on 20th December. Invoice has been issued after 7 days, within 10 days, on 27th December. So the delivery of goods has happened first, but since the invoice has been issued within 10 days, you have to take the date of the invoice as the time of supply, which is 27 December 2021. Last one, invoice was issued on 27 December 2021 and the goods were delivered on 30th December 2021. They have first issued the invoice and later they have delivered the goods. Can we apply that 10 days rule here? Can't. Why? They have first issued the invoice. If they issued the invoice before the delivery of the goods, then you have to take the date of the invoice as the time of supply. So in the third scenario, the time of supply is 27 December 2021. Right. So when we discuss section 2, I told you that only a registered person can charge VAT. So who is a registered person and who are liable to pay, liable to register? Now we are going to discuss about the registration requirements. Any person registered by Commissioner General of Inland Revenue in the following manners shall be a registered person. The Commissioner General shall register a person for VAT where an application has been made by any person. If you are liable, you have to make an application to register. The second one, the Commissioner General, having regard to the nature of the activities, is of the opinion that a person is required to be registered but has not made an application to that effect. Under the Act, you are liable to register, but you haven't submitted an application. If the Commissioner General finds that you are liable but has not submitted an application, you will be taken to the department and you will be registered. That is known as forced registration. Forced. You are forced to register. Right. Now we will look at the registration requirements. Who are the persons that are liable to register? Requirements are given in section 10. Every person who carries out a taxable activity in Sri Lanka shall register for VAT if total value of taxable supplies in a taxable period has exceeded rupees 75 million at the end of the taxable period, or total value of taxable supplies has exceeded rupees 300 million in any 12 months period. Total value of taxable supplies. There you do not consider the value of non-taxable supplies for registration purposes. You have to see the value of taxable supplies, total value. In a taxable period, it could be a 1 month period or 3 months period. If the value of taxable supplies has exceeded rupees 75 million at the end of the taxable period, or the total value has exceeded 300 million in any 12 months period, you must make an application and apply for the registration. Right? Actually, this is based on your historical data. You can apply for the registration based on your historical data. After the year end or after the taxable period, you look at your history and you check whether you have your taxable, the value of taxable supplies has exceeded these thresholds. And if it has exceeded, then you must make an application and register. Under B, at any time, there are reasonable grounds to believe that the total value of taxable supply is likely to exceed 75 million in any taxable period or 300 million in any 12 months period. That is basically based on your future data. You have reasonable grounds to believe that the value of taxable supply will exceed these thresholds, 75 million in a taxable period or 300 million in any 12 months period. Then in that case also, you have to apply and get the registration from the Department of Inland Revenue. Right? So if the value of taxable supplies has exceeded this threshold, you must apply and register. But if the value of your taxable supplies has not exceeded these thresholds, but still you want to register, you can apply for the voluntary registration. It is not compulsory registration because you are below the threshold. It is not forced registration because they can't force you to register because you are below the threshold. But still, you want to register. You can make an application and apply for the registration. But that will be subject to the approval of the Commissioner General. The registration will be made. That is called voluntary registration. You are not liable to register, but you are entitled to register. We look at question number 5. Determine whether the following persons are required to be registered under the VAT Act. Required to be registered, whether they are liable to be registered. A company which is engaged in sale of manufactured goods with an annual turnover of 500 million. What was the annual threshold? 300 million. Now this company has exceeded the threshold because its annual turnover is 500 million. So it is required to be registered under the Value Added Tax Act. Second one, an individual who provides consultancy services with an annual income of 60 million. Annual income is 60 million, whereas the annual threshold is 300 million. Is he required to be registered? No. That an individual is not required to be registered because he is below the threshold. A company which is engaged in the sale of locally purchased goods with an annual turnover of 350 million. Annual threshold is 300 million. In this case, the annual turnover is 350 million. So that company is required to be registered. Right. Next one, goods or services supplied in Sri Lanka. As I told you, when we discuss the provisions in the section 2, the taxable activity has to be carried on or carried out in Sri Lanka. If it is carried on or carried out outside Sri Lanka, you can't charge VAT. It has to be carried on or carried out here. Right? So under that, when you are doing a taxable activity, under that you do supply of goods and supply of services. The Act has identified the circumstances where goods or services shall be deemed to be supplied in Sri Lanka. What are the circumstances where goods or services can be treated as supplied in Sri Lanka? If they can be treated as supplied in Sri Lanka only, you can charge VAT. So the goods or services shall be deemed to be supplied in Sri Lanka where the supplier carries on or carries out a taxable activity in Sri Lanka. If the taxable activity is carried on or carried out in Sri Lanka, goods or services are also deemed to be supplied in Sri Lanka. Second one, the goods are in Sri Lanka at the time of supply. If the goods are in Sri Lanka, when you do the supply, that is also deemed to be supplied in Sri Lanka. The third one, the services are performed in Sri Lanka by the supplier or his agent. If the services are performed in Sri Lanka, it is deemed to be supplied in Sri Lanka. If the services are rendered outside Sri Lanka, it is not covered here. Right. Let's look at question number 7. Advise whether a company engaged in the business of providing management consultancy services is chargeable with VAT on the following transactions. Services rendered in Sri Lanka to clients in Sri Lanka. Services have been rendered in Sri Lanka, so it is chargeable with VAT. It's a service supplied in Sri Lanka. Second one, services rendered in Sri Lanka to clients outside Sri Lanka. Do we have to worry about the recipient of the service? No. It can be clients in Sri Lanka, it can be clients outside Sri Lanka. As long as the services are performed in Sri Lanka, it is chargeable with VAT. The second one is also chargeable with VAT. Third one, services rendered outside Sri Lanka to clients outside Sri Lanka. Services have been rendered outside Sri Lanka. Is it chargeable with VAT? No, because those services have not been rendered in Sri Lanka. So the third one is not chargeable with VAT. Right. Now we look at the supplies which are not taxable or exempt supplies or non-taxable supplies. As I told you, VAT is not charged on non-taxable supplies or exempt supplies. So we have to understand the supplies that are treated as non-taxable supplies. Then we know when we do these kind of supplies, which are treated as exempt supplies, we can't charge VAT. The VAT is not charged on non-taxable supplies. A registered person is chargeable with VAT only in relation to the taxable supply. Exempt supplies listed in the first schedule to the Act are not subject to VAT, that we have already discussed. I have shared with you a PDF document with a list of exempt supplies with the amendments to the Value Added Tax Act up to 2021. There are about 15-16 pages. So when you find a free time, please go through it and see the items that are treated as exempt supplies. So on those supplies, you can't charge VAT. So when you go through that list, those exempt supplies are categorized under 3 headings. Supply or import. Under that, some supplies are, some goods and some services are listed. So what does this mean? If a supply, if a good or service is classified under supply or import category, it is exempt when you do the supply. Also, it is exempt when you import that particular good into Sri Lanka. If it is classified under supply or import category. The second category is supply. If a good or service is identified under supply category, only the supply is exempt. It is exempt only when you supply. If the same item is imported, then you will have to charge VAT. The third one, import. If a good is classified under this category, it is exempt only when it is imported. If the same item is supplied, it is chargeable with VAT. So you have to go through that list carefully and see the category under which those are classified. I'm not going to discuss about that list now because it will take considerable time. So when you find a free time, you will have to go through it. So that's about section 2, part A. What we discussed so far is the section 2, part A. Now the part B. What shall be charged when you import goods into Sri Lanka on the importation made by any person? So that is what we are going to discuss now, part B of section 2. VAT on importation of goods shall be charged, levied, and collected as if it is a custom duty. As a custom duty, VAT is charged on the importation. Like PAL, like CES, VAT is also charged when you import goods into Sri Lanka. Right. Now, when we discussed section 2, I told you that when you import goods into Sri Lanka, you must pay VAT whether you are registered or not. Right? But here, there is a registration part where you need to get an identification number from the Inland Revenue Department to clear your goods. After you do the importation, within 14 days, you have to inform the department that you have imported goods and you need to clear them. So you have to have an identification number that is issued by the Department of Inland Revenue. Then once you submit your identification number only, you can clear your goods. This is now called as temporary registration. Right? Every person who is an importer of goods into Sri Lanka shall notify the Commissioner General not later than 14 days prior to the clearing of such goods that he has imported such goods and obtained from the Commissioner General an identification number for the clearing of such goods. The said notification is not required in the following circumstances. Importation under the personal baggage. There you need to get an identification number. And person who is already registered for VAT under section 10 that we already discussed. If you are already registered there, because you have exceeded the threshold, if you are already registered there, then you don't have to get another registration to clear the goods. You can apply the same identification number and clear the goods. Right. Now, this is the calculation part. how to calculate the VAT payable. As a registered person, you are authorized to collect taxes from VAT from the public. And also, when you purchase goods and services from other registered persons, and when you import goods into Sri Lanka as inputs, there are taxes that you pay on your purchases as well. So VAT, there are two types of VAT. VAT that is collected on your supplies, that is your output VAT. The tax that is paid on your purchases and importation, that is known as input VAT. So the amount of VAT payable is computed as follows. Output VAT less allowable input VAT. So the difference between these two is the VAT payable. If your input VAT is less than the output VAT, there's a VAT payable. Is it okay now? Please keep your mics muted unless you want to ask something. So the amount of VAT payable is computed as follows: output VAT minus allowable input VAT. If your input VAT is less than your output VAT, there is a VAT payable. If your input VAT is more than your output VAT, there is a overpayment of input VAT. So first we will look at the output VAT. Output VAT is computed by applying relevant VAT rates on the supply, on the value of supply of goods or services. Basically, this is the VAT that you collect from your customers. How to calculate it? You have to apply the rates, relevant rates, on the value of supply. You have to value the supply and apply the rate. Now, what is the value of supply? Here I have given only the basic rule. There are some more provisions in the Act as well. If you supply for a consideration in money, you supply goods or services, and in return you receive money. The value of supply is the consideration minus VAT. That is the consideration you receive, you deduct VAT component that is included in the consideration. Or open market value, whichever is higher. First you have to take the consideration and remove VAT. Then you have to take the open market value. Compare these two and take the higher value. That is the value of supply. So generally, goods and services are supplied at the open market value. But there can be situations, especially where transactions are happening between associated parties, related companies. Transactions may not happen at the open market value. So the consideration minus VAT, it will be less than the open market value. But what you are receiving is the consideration minus VAT. But the open market value is higher. what is the amount on which VAT is chargeable, that is payable. That's the open market value. So you have to be very careful when you do intercompany transactions. It has to happen at the open market value. Otherwise, you will have to pay more taxes than what you have collected as output tax. Second one, if the supply is not for a consideration in money or partly in money, we have to take the open market value. So that is the value of supply. On that, we will have to apply the relevant tax rates and compute the output VAT. These rates you already know. The following rates are applicable on the taxable supplies of goods or services. One is zero rate. The other one is the standard rate, which is 8% currently. We have two rates, zero rate and the standard rate, 8%. So you take the value of supply and apply the relevant rate and compute the tax payable, compute the output VAT. Right. Now we will look at the supplies that are classified as zero rated supplies. Taxable supplies are of two types: zero rated supplies, or the supplies that are taxable at zero rate, and the supplies that are taxable at the standard rate. So here what I have given is the supplies that are taxable at zero rate. What are the supplies that can be taxable at the rate of 0%? So those supplies are given in section 7 of the Act. Under A, goods shall be zero rated where the supplier has exported such goods. Goods are zero rated when the supplier exports those goods. So if you are an exporter, when you export goods to other countries, you are doing a zero rated supply. Your supply is taxable, is chargeable at the rate of 0%. Right? Here we have a new inclusion that was introduced recently. As you all know, we have a foreign currency issue in the country. So exporters, when the exchange rate is going up, when you do exports, you tend to park your export profits outside the country to get the benefit of the increasing exchange rate. But country needs foreign currency very badly. So what did the government do? They brought in a new condition here. You can export and you can apply 0%. That is okay. But there's a condition that you need to satisfy. You have to bring that export proceeds into Sri Lanka through a bank account within 6 months. You have to bring the export proceeds through a bank account within 6 months. So if you don't bring that export proceeds, you can't get the benefit of this 0%. Under B, we have services shall be zero rated where the supply of such services are directly connected with. If the services are directly connected with any movable or immovable property outside Sri Lanka, the repair of any foreign ship, aircraft, or any merchant ship, any goods imported into Sri Lanka for the purpose of free export or interport trade, A copyright, patent, license, trademark, or similar intellectual property. The international transportation, and that service is directly connected with computer software development. And client support services provided over the internet or the telephone. And under Roman 8, we have the provision of services to overseas buyers by a government buying office. So there are some services listed with some conditions. Again, you have to bring those proceeds through a bank account in Sri Lanka within 6 months after the taxable period in which the service was performed. That requirement is there. If you don't bring that, you can't apply 0% on those supplies as well. And item C, any other service. So under B, we had some services listed. So C says, any other service other than B above, provided by any person in Sri Lanka to another person outside Sri Lanka, to be consumed or utilized outside Sri Lanka, shall be 0 rated, provided that payment for such service in full has been received in foreign currency from outside Sri Lanka through a bank account in Sri Lanka. There are 4 or 5 conditions that are listed here. If you provide any service that is not covered in this B, under this B here, and if you provide that service in Sri Lanka, the recipient of such service should be a person outside Sri Lanka, and he should consume or utilize such service outside Sri Lanka, and you have to bring that proceeds, the payment, through a bank account from outside to a bank account in Sri Lanka. So if you satisfy these conditions, then such service is treated as a 0 rated supply. So those are the supplies that are treated as 0 rated supplies. Under A, we have goods, export of goods. Under B, we have some services, specified services. Under C, other services with some conditions. So those are the supplies that are chargeable at 0%. Right. In the case of 0 rated supplies, no tax shall be charged in respect of such supply. Actually, tax is charged at the rate of 0%. Basically, no tax is charged. The supply shall in all other respect be treated as a taxable supply, even though no tax is charged on 0 rated supplies. It shall be treated as a taxable supply. So that is why we classified 0 rated supplies under taxable supplies. We'll look at question number 10 to understand the 0 rated supplies. Determine the applicable tax rate in respect of the following supplies. Export of goods. You can assume that the export proceeds are brought into Sri Lanka through a bank account within 6 months. Export of goods, applicable VAT rate is 0%. Sale of goods to an exporter. Sale of goods to an exporter where you don't do the exporting, you do your supply to an exporter to do the export. Here it is not a direct export. So we can't apply zero rate here. Then we'll have to apply the standard rate of 8% in relation to sale of goods to an exporter. Third one, consultancy services provided outside Sri Lanka for payment in Sri Lanka. Services are provided outside Sri Lanka. Payment in Sri Lanka. As I told you, if you can remember, if the services are performed outside Sri Lanka, it is outside the scope of VAT. It is not chargeable with VAT. It is outside the scope. It should have been rendered in Sri Lanka to be chargeable VAT. So the third one is outside the scope of VAT. Fourth one, consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency, and the service is consumed outside Sri Lanka. So all the conditions are met to be a zero rated supply. So the fourth one, the applicable tax rate is 0%. Next one, consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency, and the service is consumed in Sri Lanka. So the other conditions are met. Since the service is consumed in Sri Lanka, we cannot apply zero rate here. So it has to be the standard rate, which is 8%. So the applicable tax rate is 8%. Last one, consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in Sri Lankan rupees, and the service is consumed in Sri Lanka. Two of the conditions are not met. Payment has been received in rupees and the service has been consumed in Sri Lanka. So we can't apply zero rate here. The last one, applicable tax rate is 8%. Right. Now we are going to discuss about a special adjustment that we need to do when we calculate the VAT payable. So as I told you, when we apply the concept of time of supply, if you are not authorized to apply the cash basis of accounting, you have to pay VAT on accrual basis. So when you deal with accrual basis, when you do your businesses, bad debts can happen, right? You, let's say as an example, you deliver the goods today and you issue the invoice today, and you give 6 months period, credit period to your customer to pay the amount due, right? So we apply the concept of time of supply. Since you issue the invoice today and deliver the goods today, you take the date of the invoice and pay the taxes today to the department. But you have not collected that VAT component from your customer because you have given 6 months credit period. So after 6 months, when you are going to collect the amount due, the customer says, I am bankrupt, I can't pay you. What can you do? You can take legal actions and all that. But in the account, you have to write it off as bad debts. They are actually, you have not collected the VAT amount. Not only the VAT amount, you have not received your value of supply also. So the Act has identified this. The Act says, if you incur any bad debt, you are allowed to deduct it when you calculate your VAT payable. Otherwise, it is unfair. So that is provided for. You can deduct the amount of bad debt. And after writing it off, if you are able to collect it later, recover it later, then you will have to include it and pay taxes on that. So when you write off bad debts, you can deduct it, and when you recover the bad debts that's already written off, you have to include it and pay VAT on it. So let's look at question number 11. Based on the following information, compute the output VAT for the taxable period ended 31st December 2021. Sale of goods locally, 52.8 million. Export of goods, 15.3 million. Bad debts, local sales, 1.5 million. Export sales, 1 million. Recovery of bad debts of local sales, 1.8 million. Right? There are bad debts, and there's a recovery of bad debts as well. So how are we going to adjust these bad debts and compute the output VAT? If you take sale of goods locally, it is 52.8 million, right? Bad debts, local sales 1.5 million. So as I told you, it can be deducted. So you deduct 1.5 million from 52.8 million. And you have recovered bad debts of local sales, 1.8 million. When you write it off, if you are allowed to deduct it, when you recover it, you will have to include it and pay taxes. So 1.8 million has to be added to 52.8 million. Right. 52.8 million minus 1.5 million plus 1.8 million comes to 53.1 million. That is the value of supply of local sales, 53.1 million. So that is taxable at the rate, at the standard rate. So we multiply 53.1 million by 8%. Output VAT on local sales is 4,248,000. 4,248,000. Then we have export of goods, 15.3 million. Under bad debts, we have export sales, 1 million bad debts. So you deduct 1 million from 15.3 million. And the value of supply, 14.3 million. Export of goods, the applicable tax rate is 0%. 14.3 million into 0%. Output VAT is 0. right? So if you add, if you take the output VAT on sale of goods locally, which is 4,248,000, is the output VAT for this particular taxable period. So that is how you should do adjustments when you are dealing with bad debts. When you write it off, you can deduct. When you recover it, you have to include and pay the taxes. Right. Well, that's about the output VAT. You know how to calculate the value of supply. You know the rates. You know how to identify the supplies, zero rated supplies, and the supplies that are taxable at the standard rate. Now we are going to discuss about input tax. Right. We have two types of input tax. When you purchase goods and services from another registered person, they are also charging VAT from you. So you have to pay VAT and purchase goods and services. So that is the first type of input tax, that is on your local purchases of goods or services. The second type is you pay VAT on the importation. When you import goods into Sri Lanka, on the importation, you pay VAT. So you have two types of VAT. VAT paid on local purchases and VAT paid on importation. Now we will look at the restriction of input tax claim. If we look at the formula that I have given in the calculation part, output VAT minus input VAT is the VAT payable, right? So you know how to calculate the output VAT. Then you have an understanding about input VAT as well. VAT paid on your purchases and VAT paid on importation, right? But you can't claim all these input tax that you have paid when you purchase locally and the VAT paid when you import goods into Sri Lanka. There are some restrictions. Subject to those restrictions only, you can deduct input tax from your output tax. So these are the restrictions when you are going to claim input tax, when you are going to deduct input tax. Input tax in respect of motor vehicles. Input tax in respect of motor vehicles is not a deductible input VAT. But there are 5 circumstances given. Under those circumstances, input VAT in respect of motor vehicles can be deducted. So what are the circumstances? If the input VAT relates to motorcycles, yes, you can claim. If it relates to bicycles, yes, you can claim. If it relates to motor coaches provided by an employer for the transportation of his employees, yes, it is allowed. Motor vehicles used for excursion tours or for the transportation of tourists or transportation of goods or hiring cars, input VAT is allowed. of any taxable activity. Yes. Under these 5 situations, you can deduct or you can claim input tax in respect of motor vehicles. Other than that, any input tax in respect of motor vehicles is not deductible. Second restriction, input tax not connected with the taxable activity. Input tax not connected with the taxable activity. Now, when you do your supplies, you can do taxable supplies and also non-taxable supplies. Taxable supplies or non-taxable supplies. If you are doing non-taxable supplies, the input VAT relating to those non-taxable supplies is not deductible. Input VAT shall be directly connected with the taxable activity. If it is connected with non-taxable activity, it is not deductible, right? So I would like to explain about the difference between zero rated supplies and exempt supplies here. Now, if you look at the output VAT, on zero rated supplies, the applicable tax rate is 0%. There, the output VAT is 0. On exempt supplies, we don't have an applicable tax rate because we don't charge VAT. Output VAT is 0. Right? So as far as the output VAT is concerned, there is no difference between the zero rated supplies and exempt supplies. But if you look at this provision carefully, input VAT in relation to exempt supplies cannot be deducted. Input VAT in relation to zero rated supplies is deductible. So that is where the difference is. As far as output tax is concerned, there is no difference, but in relation to zero rated supplies, input tax can be deducted. In relation to exempt supplies, input VAT cannot be deducted because of this restriction. Next one. Input tax not supported by a tax invoice or customs goods declaration. If it is a local purchase of goods or service, you have to support your input with a supporting document. That document is a tax invoice. If it is a local purchase, you have to have a document to support your input that is going to be deducted. If it is a local purchase, the supporting document is a tax invoice. If it is an import, the supporting document is the customs goods declaration. You have to have these two documents with you if you want to deduct input VAT from your output VAT. If you don't have a valid tax invoice or a customs goods declaration, you can't deduct input VAT. Next one. And there is a specific time period given to claim or to deduct input VAT that is in a tax invoice or customs goods declaration. If it is a tax invoice, you have to deduct the input VAT within 12 months period from the date of the tax invoice. So after 12 months period, even if you have the original tax invoice with you, you can't deduct the input VAT from your output VAT. If it is a customs goods declaration, you have 24 months to deduct the input from your output VAT. After 24 months, you can't deduct it from your output VAT. Right. Those are the restrictions that we have when we are going to claim input VAT from the output VAT. So we have to discuss one more adjustment here. Adjustment of VAT by tax credit note to tax debit notes. Where a registered person has issued a tax invoice and accounted for an incorrect amount of tax in the original invoice, you issue the invoice with an incorrect amount of VAT. It can be a overcharge or it can be undercharge. So if you have issued the original invoice by overcharging or undercharging VAT, and after you find that you have made a mistake in the original invoice, then you can rectify it by issuing a debit note, tax debit note, or tax credit note. Right? But when we are going to do the adjustments because of the credit notes and debit notes, if we are adjusting the input VAT, it shall be done within 6 months from the date of the original invoice. So these are the adjustments that we need to do in relation to credit notes and debit notes. From the customers, from the supplier's point of view, if the supplier issues a tax debit note, he has to pay it as output VAT. He issues a tax debit note where he has undercharged VAT in the original invoice. So originally he has undercharged, now he is collecting it, so he has to pay it as output VAT. If the supplier issues a tax credit note where he has overcharged VAT in the original invoice, he has to claim it as input VAT. From the purchaser's point of view, if he receives a tax debit note issued by the supplier, he can claim it as input VAT. If the purchaser receives a tax credit note issued by the supplier, he has to pay it as output VAT. So these are the adjustments that we need to do with regard to tax credit notes and tax debit notes. Let's look at question number 12. ABC Limited has issued a tax invoice to XYZ Limited for a value of 1 million rupees and VAT charge is 80,000 rupees. Later, it was found that the value of supply should have been 1.1 million. What action should be taken to adjust the undercharge of VAT? What is the impact on VAT liability of ABC Limited and XYZ Limited? So originally, ABC Limited has issued the original invoice by undercharging VAT. The amount should have been 1.1 million, but they have mentioned it as 1 million. So there is a 1 million difference. On that 1 million, if you apply the applicable rate, which is 8%, 1 million into 8%, 8,000. So originally they have undercharged 8,000 VAT. So what action should be taken to adjust the undercharge of VAT? ABC Limited should issue a tax debit note for 8,000 rupees. ABC Limited shall issue a tax debit note for 8,000 rupees. What is the impact on VAT liability of ABC Limited and XYZ Limited? Since it is a tax debit note, ABC Limited has to pay it as output VAT, that 8,000, and the XYZ Limited can claim it as input VAT. Question number 13. The following information is extracted from the books of accounts of PQR Limited engaged in the business of manufacturing of goods for the taxable period ended 31st December 2021. All transactions given below are exclusive of VAT where applicable. The VAT is not included. Amounts are given excluding VAT. Output. Under output, they have supplies to VAT registered persons 3.5 million. Supplies to non-VAT registered persons 2.5 million. Under input, import of raw materials 3 million, local purchase of raw materials from VAT registered persons 1.5 million, purchase of raw materials not supported with tax invoices 1 million, salaries and wages 1.8 million. Calculate the VAT payable for the taxable period ended 31st December 2021. So I have given the answer here. First, we have to calculate the output VAT. Then we deduct the allowable input VAT and calculate the amount of VAT payable. Output VAT, supplies to VAT registered persons. The value of supply is 3.5 million. So the applicable VAT rate is 8%. The output VAT 3.5 million into 8%, 280,000. Supplies to non-VAT registered persons. Whether your customer is a registered person or whether he's not a registered person, it doesn't apply. As long as you are registered, you have to collect VAT from your customers. So supplies to non-VAT registered person 2.5 million. That's the value of supply. On that 8%, output VAT comes to 200,000. So the total value of supply is 6 million. Total output VAT 480,000. So from that, we are going to deduct input VAT. Import of raw materials 3 million. Where at the time of importation, you would have paid tax at 8%. So 3 million into 8%, 240,000. Local purchase of raw materials from VAT registered persons 1.5 million into 8%, 120,000. Purchase of raw materials not supported with tax invoices. As I told you, if you are going to deduct any input tax from your output tax, you have to have a document with you. If it is a local purchase, you have to have the tax invoice. If it is an import, you have to have the customs goods declaration. So here we don't have the tax invoice. So you can't claim input VAT applicable to that purchase. Salaries and wages. When you pay salaries and wages, you don't have to pay VAT, right? Because your employees are not charging VAT. So it is not applicable. So the total allowable input VAT is 360,000. Your output VAT 408,000. Allowable input VAT 360,000. So the difference 120,000 is the amount of VAT payable. Right. We'll look at question number 14. In the above question number 13, in addition to the output mentioned, if the company has exported goods amounting to rupees 750,000 and supplied exempt goods amounting to rupees 1 million, compute the VAT payable for the taxable period ended 31st December 2021. So what is new here is the exports of 750,000 and the exempt supply of 1 million. So this is how the adjustment is made when you have mixed supplies. Zero rated, exempt supplies. So first we calculate the output VAT. Supplies liable at standard rate that we have already calculated. 6 million into 8%, 480,000. Supplies liable at zero rate, that is exports. Value of supply 750,000, applicable tax rate 0%, output VAT is 0. Total value of taxable supplies 6,750,000, that's the total of supplies liable at standard rate and supplies liable at zero rate. 6,750,000, total output VAT 408,000. And exempt supplies 1 million, there is no output VAT on it. The value of total supplies 7,750,000, total output VAT 480,000. So from that, when we are going to deduct allowable input VAT, do you remember input VAT attributable to exempt supplies is not deductible. So in our computation, we have exempt supplies amounting to rupees 1 million. So input VAT attributable to that 1 million is not deductible. So I have given here simple formula to compute the amount of input VAT that is attributable to taxable supplies. Total common input, that is 360,000 that we calculated earlier. We divide it by the total supply, including exempt supplies, and we multiply it by the taxable supplies to compute the input VAT attributable to taxable supplies. So it is 313,548. So the amount of VAT payable 480,000 minus 313,548, 166,452. That's the amount of VAT payable. That is how you should adjust the input VAT when you have mixed supplies, exempt supplies, and taxable supplies. Right, we will quickly look at some obligations that are there in the Value Added Tax Act. Tax invoice. As I told you, if you want to claim input VAT, you have to have a tax invoice with you, right? If you are a registered person and if you are purchasing goods or services from another registered person, you have to inform that person that you are also a registered person. So I am a registered person, so please issue me a tax invoice because I want to claim the input that I am paying to you, right? So if such a request is made, so the supplier has to issue a tax invoice to you within 28 days after the supply is made. So let's look at the composition of a tax invoice, the components that should be there in a tax invoice. The name, address, and the registration number of the supplier. The name, address, and the address of the supplier to whom the supply was made. That is the customer's details. The date on which the tax invoice was issued, the date of supply, and the description of the goods or services, quantity or volume of the supply, the value of supply, and the tax charge and the consideration for the supply. Value of supply, tax amount, and the total consideration separately you have to mention in the tax invoice. And the words tax invoice, the word tax invoice shall be there in a tax invoice. If that word is not there, it is not a valid tax invoice. Then tax invoice on imports, as I told you, the customs goods declaration is treated as the tax invoice when you import goods into Sri Lanka. Next, retaining copies of tax invoices. Now, when you issue tax invoices, you have to give the original tax invoice to your customer, and you have to keep the copy for 5 years period. 5 years period, you have to keep the copies of tax invoices with you. Then we have issue of copies of tax invoices. So as I told you, when you are going to claim input VAT, you have to support that input with a tax invoice. So there can be situations where the original tax invoices are misplaced. So in that case, you have to get a copy from your supplier. But the supplier will issue a copy, but it should be marked clearly as a copy. Because for the same supply, you can't issue 2 tax invoices. So a copy will be issued stating that it is a copy. Then the issue of non-tax invoices. If you are supplying to a person who is not a registered person under the Value Added Tax Act, you don't have to issue a tax invoice to that person. You can issue a general commercial invoice, including the tax amount in the consideration, without separately showing the value of supply, tax, output VAT, and the consideration. You can just put the total consideration, issue a commercial invoice, and collect the VAT. So filing of VAT returns. After you get the registration under the Value Added Tax Act, there's a form called VAT Value Added Tax Return that you will have to fill and submit to the department. It has to be done before then, within 1 month after the end of the taxable period. Then we have payment of tax. If the applicable taxable period is 1 month period, you have to make the payment on or before 20th day of the month following the end of the taxable period. If we compute the VAT payable for the month of January, you have to make the payment before the 20th of February. Within 20 days, you have to make the payment. If it is quarterly taxable periods, again, payments have to be made on monthly basis. The first month payment has to be made before 20th of the second month. Second month payment has to be made before the 20th of the third month. Third month or the final month payment has to be made before the 20th of the fourth month after the end of the taxable period. Then finally, we are in the final part. I am rushing through this presentation because the time is already up. Simplified value added tax, generally known as SVAT. So I'll explain the background of introducing SVAT. Now, as an example, if you take an exporter, since he is not charging VAT from his customers, his output VAT is 0. Output VAT is 0. But since he is entitled to deduct his input, when he is purchasing goods or services from other registered persons and when he is importing goods into Sri Lanka, he is liable to pay VAT. So he has input VAT. Since he is doing a taxable supply of goods and services, he is entitled to deduct his input VAT. His output is zero, but he will have an input VAT. So he will end up with a refund. He will end up with a refund. So the department has to pay it back to the exporter because of this zero rated supplies. Now, what happens here is the exporter pays VAT on his purchases, then that particular suppliers, that will be his output VAT. Then from that output VAT, he deducts his input and pays the balance to the Inland Revenue Department. So the Inland Revenue Department has to pay it back to the exporter. The Inland Revenue Department, just by looking at the return, they won't release refunds. They can't. They have to make sure that refunds are genuine. So they will do an audit. So it will take time. After completing the audit only, after they are satisfied that refunds are genuine, then only they will refund it to the exporter. So it will take considerable period of time. So it is the exporter's money that is going here and there, rounds and rounds. So the exporter will have cash flow issues. Because of the application of this value-added tax act, exporter's money is going here and there, so he will have cash flow issues. So he might have to take borrowings, increase his OD facilities, and on that he has to pay interest cost. Then his cost is going up. When his cost is going up, he will have to recover from the goods and services that he is supplying. So he will have to increase the prices. Then he won't be able to compete in the international market just because of value-added tax, right? So the government came up with this concept of simplified value-added tax. So under that, there are two types of registrations. Those who are entitled for refunds can register as registered identified purchasers, RIPs. Registered identified purchaser. Those who are supplying to those am I audible?
Yes, Nadika. Yes.
Right. Just we will look at the persons who are entitled to register as RIPs, exporter of articles or services.
Ms. Nadika, can you
Yes.
please share the screen again? We can't see the screen.
Sorry. Can you see it now?
Yeah, we can see.
So these are the persons who are entitled to register under SVAT scheme as RIPs. Exporter of articles or services, those are zero rated suppliers, and registered persons engaged in any strategic development projects, registered persons engaged in any specific projects, suppliers who provide value-added services to an exporter, persons registered under Section 22(7). Basically, these are long-term projects where it takes a considerable period of time to do the supply, to do the taxable supply. It takes a considerable period to implement the project. So those can register under Section 22(7). If someone is registered under Section 22(7), they can apply for RIP status. And then finally, any registered person who supplies goods or services to any registered person mentioned above. Under A to E, some of the registered persons are mentioned. If someone is supplying to those persons and the value of that supply is more than 50% of his total supplies, then he can also register as a RIP under the SVAT scheme, because he will also have refunds at the end. So registered identified suppliers, as I told you, suppliers of goods or services to RIPs. Those who are supplying to RIPs can register as RISs. So how does SVAT operate? How this cash flow issue is eliminated? So what happens here is, so once you get the RIP status, you will be given a voucher book that is called SVAT credit voucher. You would have seen them when you are doing audits. SVAT credit vouchers are given by the Department of Inland Revenue to RIPs. It's like a, let's say, a checkbook. Their credit vouchers are there. So when a RIP purchases from a RIS, such a RIS should issue a suspended tax invoice. It is not a normal tax invoice that we discussed earlier. This is a suspended tax invoice. So the RIS issues a suspended tax invoice to the RIP. Then what happens? RIP, without paying VAT in cash, he takes a voucher, put the amount, and gives it to the RIS. So he is not paying VAT in cash. He just gives a credit voucher that was given by the Inland Revenue Department. Since the RIP does not pay VAT component to the RIS, no refund will generate on such VAT. There is no cash involvement, so the no refunds will arise. If the RIS does not claim the SVAT credit voucher, such supply shall be deemed to be a taxable supply. Now, RIS, he has to make sure that RIP issues the credit voucher to him. Now, practically, if you all are working with the SVAT schemes, most of the time suppliers are they're blaming that RIPs are not issuing credit vouchers on time. But it is your responsibility as RIS to collect the credit voucher on time. Otherwise, you will be in trouble, because it is a type of your supply on which VAT is not received in cash. So it is a part and parcel of your output VAT that is not supposed to receive in cash. For that, you will get a credit voucher. If you don't have the credit voucher, that it is treated as a taxable supply, and on that we will have to pay back in cash, right? So make sure as a RIS you collect it's a credit voucher from the RIP. If the RI, there is a small mistake here, the last para, it has to be RIP, it's not RIS. Sorry about the mistake, it has to be RIP. If the RIP uses the suspended purchase for any other purpose other than the specified purpose, it should be treated as a taxable supply. He also has obligation. He just can't issue credit vouchers and buy goods and services on suspended terms because that is given for a specific purpose. So if he is misusing those credit vouchers, such purchases shall be treated as taxable supplies and he will have to pay VAT in cash. Now the final question with an adjustment with SVAT. Question number 15. A Limited is a VAT registered company engaged in the business of manufacturing bags. The company is also registered under SAT scheme as a RIS. The following information is given for the taxable period in the 31st December 2021. Turnover exclusive of VAT. Under that, we have local sales 6,084,000. Sales to exporters under SVAT scheme. So he has supplied to exporters who are registered as RIPs 1,716,000. Input VAT. On imports and local purchases, he has paid 243,000. On repairs to motor car used by the CEO, 24,000. The company has collected SVAT credit vouchers of rupees 137,280 on its suspended supplies. Calculate the balance VAT payable for the taxable period ended 31st December 2021. Well, this is the answer. So first we calculate the output VAT. Under that we have local sales and suspended supplies. Suspended supplies are supplies that are made to RIPs. Local sales 6,084,000. That's the value of supply. We apply the standard rate 8%. Output VAT 486,720. Suspended supplies 1,716,000. 8%, 137,280. Total value of taxable supplies 7.8 million. Output VAT 624,000. From that we deduct allowable input VAT. On imports and local purchases, they are paid 343,000. Here again there is a mistake. Here on imports and local purchases, in the question it should be 343,000. It's not 243,000. So on imports and local purchases, the company has paid 343,000. On repairs to motor car used by the CEO, the company has paid 24,000. Is it allowable? As I told you, when it comes to claim of input in relation to motor vehicles, there are some circumstances given. So this is not a type of circumstance that we can claim as input VAT. So this 24,000 is not allowed to be deducted. So on repairs to motor car used by the CEO, it is not allowed. So the allowable input VAT is 343,000. Then we have output VAT, then we have input VAT. You deduct input VAT from your output VAT, the VAT payable comes to 281,000. Now, are you liable to pay 281,000 in cash to the department? No, because on suspended supplies, you have not received VAT in cash. For that, you have received SVAT credit vouchers from your purchases amounting to 137,280. So that you can claim from the amount of tax payable. So the balance VAT payable comes to 143,720. Well, this is how you have to do adjustments as RIS when there are suspended supplies. Well, that's about the presentation. At the end, I had to run through the presentation quickly because of the time restriction. Well, that's about it. If you have questions, you can raise now. So you can put it in the chat box.
Students, if you have questions, you can ask. Right, it seems like everything is clear. So nothing is clear. I don't know. Okay. Thank you very much, Mr. Nadika, for accepting our invitation. As I mentioned at the start, you are always supporting us to conduct this course successfully. And it was really insightful presentation, comprehensive presentation, because I know that within the given time, it's really challenging to cover the topic value-added tax. Anyway, you did a good job, and hope that our students have got the knowledge. And one of our students has prepared herself to thank you. Now,
thank you, sir. Shall I proceed?
yeah, sure.
Yeah, go ahead.
Thank you, sir. And good evening, everyone. I'm Aruna Galapatti, representing all my batchmates present in the lecture today. I would first like to start with my deepest sense of appreciation to Mr. Nadika Suranjana, tax partner of Vijayaratna and Company, director of HLB Lanka Business Advisory Services Private Limited, and our guest lecturer for the session today. A big thank you to you, sir, for giving us an excellent coverage related to the topic value-added tax. We are grateful to you for joining with us today to enlighten us with new knowledge despite your very busy schedule. Further, I also wish to express my gratitude to our senior lecturer, Mr. Uday Shanta, and our senior lecturer, Mr. Sandaruwan, our respected panel of lecturers, for organizing such a session for better understanding of the subject. And I think unknowingly, we have reached the final lecture for our taxation course today. And I know every one of you will accept with me the fact that taxation has always been an interesting lecture to attend from day one. Again, a big thank you for all three sirs for making it happen. Finally, thank you all for participating for the session today. Thank you and good night.
Right, finally, I must also thank Uday Shanta sir, Sandaruwan sir, and the department for the opportunity given to me to do this presentation for the third consecutive time. And I wish you all the very best in your future endeavors. Thank you very much.